All right, let's take a look at Coinbase with the ticker COIN. We'll start off with the Bollinger Bands. We're looking pretty healthy here, still working out in the upper range of the Bollinger Bands. Of course, that always means that we have room to come down at some point and revisit this lower range. Slightly bullish. We see that the mid-range is starting to curl up. So this is a good sign for Coinbase. Will it be temporary or will it be more of a midterm long range move up? Okay, then let's take a look at some of the trend lines. All right, so looking at Coinbase here, we are on the 1 week chart. This is outlining a falling wedge for us. I can see the price just finding its way through this falling wedge scenario and then finally coming up and out. But when it comes to this falling wedge, we do have a secondary upper resistance point, which if we kind of brought out this lower floor, it would extend this falling wedge even further. You know, would probably not be very good news for our short-term traders, because it just means that we would find ourselves ping-ponging for a longer period of time before finally making our way out. Again, this longer falling wedge scenario would really bring us into the end of 2023 and into maybe Q1 of 2024 before we found our way out of it. And I think that's pretty reasonable. But the longer the wedge, the lower we could go. So, you know, that shorter scenario, we would probably find ourselves in the $30 range, $25 to $30 range as a lowest low. In this longer scenario that we're looking at here, we could even reach as low as like 17, 19, something to that effect. Could. It depends. The longer we go into this falling wedge, the worse off it's going to be. But again, with this longer scenario, this longer falling wedge scenario, I think it is quite healthy, but it's also a great chance to pick up even lower priced Coinbase. Again, we are currently finding ourselves in resistance. We're really just pinned up at the top of the wedge. So again, when we finally make our way out of this wedge, we'll probably find some type of resistance at this upper trend line here. Okay, so let's take a look at our Fibonacci retracement. So we'll go from our high to our low. It looks like, yes, we are respecting these Fibonaccis at the moment, including that God candle that moved all the way up to the 238. This is our upper range, but also look, it's lining up, of course, with our that upper purple trend line. But again, looking at the price, looking at this secondary wedge, I'm going to redraw that first wedge that we had. In this particular scenario, we would resolve quicker and find ourselves breaking out. But for this upper resistance line, it just becomes like a temporary resistance point, like a wedge within a wedge, and then we end up just breaking out anyways into the old wedge, the overarching wedge, and then finally breaking out. Okay, so let's wrap this up. I think, again, we've established some possibilities for low targets, you know, in the $25 range in the short to midterm throughout the summer, and then also further out into the macro view would be more even closer to $17, $16, you know, depending on what happens and how long we stay in this wedge, this falling wedge. And then our upper resistance as well. You just need to follow this upper resistance trend line here of the falling wedge. Currently, that's somewhere in the range of $78. But as time goes on, this is a pretty steep upper resistance. So we're going to find ourselves down at, 65, 58 by September. By the end of the year, we're going to find this at more like $43. So again, a falling wedge this steep is pretty ugly. So let's see how it resolves. Okay, so I think that does it for the Coinbase analysis. Always remember to buy low, sell high, and never sell at a loss. Have a good one, everybody.